Hello, traders. Welcome to today's session where we're going to talk about trade idea and trade plan. Is there a difference? Spoiler alert, yes, there is. I'm going to talk about the important differences and why I believe having a trade plan is crucial to your trading journey and finding success. First off, for those of you that don't know me, my name's Melissa. I am a trader at Simpler Trading. I trade in the Trendy Trading Room and the SPX Room. If you're not a member of Simpler Trading, what are you doing? We have the absolute best community of traders, not just people like me on this side of the mic, although our traders are hands down, in my opinion, some of the absolute best, but also the subscribers, the family, the traders that are sitting at home or maybe from work, listening to our ideas and taking trades. We have the absolute best community of traders that are of like mind and supporting each other. Trading as a career can be very, very lonely if you don't have that community. So I invite you, if you're not already a part of the Simpler Trading community, to come and join us and see what all the hype is about. Of course, I'd love to see you in the Trendy Room and the SPX Room, but any room that you would join at Simpler is great. All right. Before I go any further, can you do me a favor? It takes about 2 seconds, okay? 2 seconds. If you can hit the like button on this video, I would surely appreciate it. It helps get the video out to traders that need to see this because the topic I'm talking about today is very a very important step in my process of becoming a profitable and consistent trader, and that is the step of having a good trade idea is great, but if you do not have a good trade plan linked to that trade idea, you're missing a crucial step. All right. So, most struggling traders are not losing money because they can't find setups. They're losing because they enter before they have a complete plan. So, before you enter any trade, I want you to build this 3 step plan. All right. Before you click buy, you should already know 3 things. Number one, where the trade idea is valid. Number two, where it is wrong. And number three, where you are taking your profits. If you do not know those before entry, then you are not trading a trade plan. You are just reacting to candles moving on a screen. All right. So let's talk about step one in the process. If you draw your attention here to my SPX chart, this is a chart that in the SPX room, I create a trade plan for every single day. So together, we're going to create a trade plan that you could use possibly tomorrow. But if you're watching this video after the live session, then maybe the levels will not be the same. But what I want you to zero in on is the process for creating the plan. So let me clear all of the drawings off and first talk about what type of trade I'm creating a trade plan for. This trade plan would be for day traders, those of us that like to day trade the cash settled SPX or S&P 500 cash settled, the SPX, okay? So, and step one of having a trade plan is knowing where I want to be a buyer and where I want to be a seller. Okay. So in the instance of SPX here, we're going to pretend that this day has closed. Okay. And we are going to find the zone that I'm looking to be a buyer. I trade supply and demand. Okay. Supply and demand trading has absolutely changed my life in that I now have a repeatable process that works consistently, giving me a win rate of over 80% over the last 4 years of trading it. And so I'm going to look for where I have demand zones, and that is where I want to be a buyer. And then I'm going to look at where I have supply zones, and that's where I would want to be a seller. But in this case, for SPX, there is no sell zone because we're at all time highs. For that reason, we are just going to talk about a trade plan here on SPX of where I'm looking to buy a dip. So once I have identified the demand zones and I know where I want to be a buyer based on demand, then I have to ask myself when considering this as a trade plan, hey, am I really going to wait tomorrow for the market to pull back 100 points before I take an entry? And the answer to that question, if you're a day trader, would be no. So, another free indicator that I use every single day to find buy zones and sell zones is Fibonacci. The Fibonacci retracement tool, I'm just taking the most current range of price for this week and measuring from the low to the current high. And that's going to give me what we call in the trendy trading room and SPX room, we call this the bull channel. That's giving me a buy zone that tomorrow I would want to be a buyer in. And that is step one of creating a trade plan. So, my trade idea is hey, the market is super bullish and I have an idea. I want to buy the dip. It's a great idea. But now I have to put a plan with it. Step one is know the location that you will be entering a trade. For me, that location is going to be right here. So, the first step in creating a trade plan is knowing the location that I want to engage the trade. So, location, step one, check. All right. This is step 1A. And this is something that not a lot of traders think about, but I do think about it. And it is getting a precision entries or knowing not just where I want to get in, but how I'm going to get in. So for me, for SPX, right, if I'm trading it from my small account, then I know that on a pullback by the dip, I am going to want to trade XSP calls. And I like to buy at the money XSP calls. So if price falls down into this buy zone, the at the money calls would be the 730 calls. Okay, so I now know what I'm going to trade if the pullback happens. Now, if you are trading from a larger account and you trade straight up SPX calls, then you would be buying the 7,300 or 7,310 SPX calls. Or maybe you like to trade from a margin account and you like to trade debit spreads, right? Then you could potentially look at buying a 20 wide or a 40 wide spread if price pulls back in your zone. The important thing is that you, as a trader, know not just where you're going to enter, but what you're going to be buying. And so for me in this zone, that would be XSP 730 calls. I like to trade 0 DTE for SPX and XSP, so I don't need to put an expiration. But if you would like to give yourself some time, you would have that information as part of your step one in creating a trade plan. All right. Next price that I want to talk about is what must price do when it pulls back into this potential buy zone? Because you can have zones on your chart, and I can have zones on my chart, but not every zone is a zone that I'm going to trade. I need to know what has to happen here that gives me reason to initiate this trade. So, on this particular buy zone, I would be looking for confirmation. So, I found the zone on a 2-hour chart. But for day trading, I day trade off of a 5-minute chart and I wait for confirmation on a 3-minute chart. So, let's pretend it's tomorrow. We get a dip back into my buy zone. The alert would go off telling me step one of my trading plan is initiated, and I need to now wait for that confirmation. And that's going to be a 3-minute candle. So let's pretend that today's price action is tomorrow's and prices pull back into my buy zone that I already knew ahead of time I wanted to trade. All right. I have that buy zone. I have my low. I have a higher low, and we break out above that higher low candle's body. That is my trigger for entry on this trade. So now I have entered the trade. And the part of step two that I'm talking about, or step one that I'm talking about, is I know where I want to initiate the trade, the location, but I also know what it is I'm going to be trading and what I'm looking for before I enter. All right. All of that is part of that step one of a trade plan for me. Then let's talk about step two. Every time I take a trade, I think about it a little bit differently than maybe what you have heard in the past. I consider my risk first, not my reward first. It's important for me to know the amount of money that I could lose on this trade if the trade does not go in my favor. I have to know, step two, where I am wrong. It's okay to be wrong. Trading is a game of probabilities, right? And that means that if I, say, have a win rate of 80%, 2 out of every 10 trades I'm wrong on. You got to get real good at being wrong. And what I mean by real good at being wrong is you got to know where you're wrong on the trade, and then you have to stick to your plan and exit the trade for a loss if you're wrong. In this case, and in every case, I'm wrong if I'm buying this zone and I wait for confirmation and I'm just trading this up to target, not scalp trading it up to target, then my stop is the bottom of my zone. So, step two in a good trade plan is to know where you're wrong on the trade. Know where you're going to enter a trade, and then know where the trade is wrong. All right? All right. So we got the two step of the 3-step process of creating a trading plan. The third thing that I need to know is where I'm right and where I'm going to take my profits. Because let me tell you what happens with your emotions if you are watching a trade like this. All right, let's walk through it. Let's walk through it on a 5-minute chart for today. I have been trading long enough, been trading in rooms in front of people long enough to know basically the emotions that we as traders go through once we're in a trade. And in this example right here, I'm going to talk to you about it. I've entered this trade right here. Okay. And I'm feeling pretty confident about it. I know what my risk is. I know where, let me tell you where the reward was today on this trade. It was right here. I know where my reward is. Okay. My first target. I know where my reward is at, and I'm feeling pretty confident. I've entered the trade right about here at say 9:35, 9:36, sometime around there Eastern time, and I'm feeling pretty confident. Oh, price comes back a little on me, but it's not a big deal. Not a big deal. Oh, we get this nice rally out of here. Ooh, look, we're making new highs, and then we pull back all the way back to here, and my position, if I'm staring at my monitor screen, is down. Oh my gosh, I'm a loser. I was wrong. I know it's not at my stop, but I'm wrong. I can't believe I did this. And fear creeps in. Okay. Fear creeps in because this trade that you had confidence in 10 minutes ago is now showing red on your monitor screen or whatever you're looking at that shows you whether you're in profits or a loss. And it's showing red. And then fear creeps in. And you might not stop out here because none of us like to admit we're wrong. Okay. That's not where we mess up as traders on a trade like this. Hear me out. That's not where we mess up as traders on a trade like this. We like to hold on to losers like we got them in a vice grip. Okay. We hate admitting we're wrong. And if there's something we're going to do, it's we're going to ignore a stop. Okay. So I probably am not stopping out here. I'm probably holding on like a vice grip, but I've got a lot of fear at this point because I've watched my account go red, right? And so then when I get a little rally right here, and then we get this little baby pullback right here that's really nothing, I get out of the trade for a small win. Have you ever done that? Have you ever done that? I mean, answer in the comments if you're watching this live. Let's be honest with each other. I will tell you honestly, I have done that. I still do it to this day if I allow that fear emotion to grab me while I'm in a trade. Okay. And we get out of this trade right here. Okay. And because let's pretend we didn't know what our plan was, step three, we didn't know where our target was. And so we're scared and we get out right here because we pull back. We get out for a small win. And then we watch the trade do this. And now we are angry with ourselves. Now we get into revenge trading and we feel like we have to take a trade to make up for what we missed out on. You been there? You done that? I have. All right. And you start allowing emotions to dictate your trades. That's why it is important to know where we want to enter, what we're entering and how we're going to do it, what we're waiting for to see before we enter. We got to know where we're wrong on the trade. That's our stop. And we have to know what our target is. So when we are at all time highs, I don't have a target necessarily, but I can use the big psychological round number of 7350 that we have came up to and hit today, right? Because we're trading this for tomorrow. So I can just have my target right there before the round number of 7350, right before my all time high, whatever that happens to be today. And that's going to be my first target. So then I look at this trade and I say, okay, I've got a reward to first target of about 32 points, right? About 32 points, 33 points to that round number first target. The risk on the trade's about 27, so it's at least a 1-for-1. That's what I'm looking for on my first target, at least a 1-for-1. All right, so it's going to meet my criteria of risk to reward first target, at least a 1-for-1. Then for my next target, because we are at all-time highs, I have to use Fibonacci extensions. So I'm going to take the move that we had the prior day, which is today, and I'm going to draw some Fibonacci extensions here. And I like to use the level between 23.6 and the 38.2 as a target. So I'll just put a target there as an extension target. Then I like to use the 1618 and then 100% of the prior day's move. Okay. So then I have the second target, the third target, and finally the ultimate target if tomorrow proves to be the same price action as today. All right. So now I have the third step in a trade plan, and that is where I am going to reward myself on the trade. So let's say that I've gotten into the 730 calls here and I paid about $2 a piece for them. And my total risk on any trade that I will take is $1,000. That means right here, I am buying 5 contracts. Okay. At my first target, I'm going to scale out of, let's just say 2. You choose, half is what I use. So you can scale out of 2 or you can scale out of 3. For this example, we're going to say 2. So I'm going to scale out of 2 contracts here. And I'm going to move my stop to break even because the last thing I want to do is allow a winning trade to turn into a losing trade. That hurts. So I scale 2 here. We make it to my next target. I have 3 contracts left. I'm going to scale out of another trade or another contract right here. Oh, scale 1. Then I'm left with 2. I'm going to scale another here. And let's say that price indeed has came back to this buy zone and I have initiated a trade and I have made it all the way up to 2 or 3 targets. This is when I like to start trailing my stop. And this is all part of the third step, the reward. You got to know where your targets are, but you also got to know your process around taking profits and moving stops. This is my process. My process says I'm going to run some Fibonacci's of the move. Let's say we're at this third target, and I'm going to move my stop up as we make higher highs. I'm going to move it up with this 38.2 Fibonacci level. All right. And that's how I scale out of a trade and trail my stop as price is headed to the final target. Once price makes it to the final target, typically, if it's a day trade, I'm just going to exit there and I'm going to take the big old winner. So I can tell you, remember, we looked at this trade and today we had this exact, maybe not exact, but very close, same buy zone today. All right. And the trade set up to buy, ironically, the $730 XSP calls. and on entry paid $2, and at first target, which happened to be 73.40, those $2 contracts were worth $4, doubled. Took profits right there at that uh, strike. And now price is coming up to what could be a second target where we will take profits again and then trail our stop up. So this trade that would I would be setting up for tomorrow is actually a trade that played out perfectly to plan today. But let's pretend that you or me or anyone else comes in to the day and you look at the price action and you have an idea. And your idea is this market is bullish and I want to buy a dip. And the bell rings and you have no idea what the plan is, except that your idea is to buy a dip. You'll buy a dip and your emotions are involved. You have no plan. You try to create a plan as you're in a moment. And guess what? Then you're in the moment. Emotions are involved. It is overpowering your logical brain. And so now you're stuck with a plan driven by emotions. And in my experience, the plan that was ex- planned out ahead of time with logic and levels and process backing it is going to be the much more profitable way to trade than any emotion driven trade idea that you have no plan for and you find yourself in a trade that you don't know what to do with. All right. It's very important to me that you learn that there is a difference between a trade idea and a trade plan. Every trade plan starts with an idea, but you need to follow that idea up with a trade plan. So I encourage you tomorrow morning, before the market ever opens, whatever it is you're wanting to trade, first, have the trade idea. But second, develop a 3-step plan. Number one, know the location that you're going to engage the trade. Part of that is knowing what you're going to be trading and how you're going to trade it. What kind of price action needs to happen at your buy level in order for you to take the trade. Okay, that's step number one. Step number two is you need to know where you're wrong in the trade and then commit to yourself that you're going to honor that stop if price gets there. And then finally, step number three is knowing where you're going to take your reward for being right and how you're going to stay in a winning trade, paying yourself if the price action continues in your favor. All right. That's the difference between having a trade idea and a trade plan. And I encourage you to make this a part of your process every single day and just track it and see if you don't have better results as far as your P&L curve. All right? All right. Thank you so much for joining me today. As always, and a reminder again, if you're not a part of the Simpler community, join me in the Trendy Room or the SPX Room. I would love to have you as part of our family. And if you're not subscribed to the channel, make sure that you hit the subscribe button, and I would love to hear from you in the comments. What part of creating a trade plan do you struggle with the most? I read all of the comments and I reply to them as well. So let me know in the comments what it is in creating a trade plan. What step is it that you struggle with the most? All right. I'll see you all in the next video. Have a great